Good afternoon, everyone, and thank you for joining us for our monthly international market update for May 2024. Audio em português também estará disponível.
It's getting better.
I am Raj Patel, the Chief Equity Strategist at Itaú, and we have an extremely exciting market update live. But first, we wanted to take a moment to acknowledge the devastating floods in Brazil and the loss experienced by many people and communities. Our thoughts are with those affected. Today, the Market Update Live is with the Milken Institute, which just finished their 2024 Milken Institute Conference. To start with, we wanted to give everyone the format for today's market update. We will start with Laura Deal-Lacey, who is the Executive Vice President International and responsible for the international side of the Milken Institute. Prior to joining the Milken Institute, she was the Executive Director of the American Chamber of Commerce in Singapore, where she represented the interests of U.S. companies in Singapore. She will give a brief background of the Milken Institute and its mission. Next, Marcelo from Itaú, who has close to 20 years of experience in finance and is a partner at Itaú as the head of global markets and strategy, will moderate a conversation with Rich Ditizio. We are honored to have Rich join us today. He is the CEO of the Milken Institute. Prior to joining the Milken Institute, he had an impressive 25 career in banking and most recently served as the CEO of Citi Private Bank. Lastly, we'll close with Vinicius Lumerets, who is a Milken Institute Fellow. He is the chairman of the Wish Group, which owns several hotels and theme parks across Brazil. He was also the Minister of Tourism in Brazil. We thought it would be great to have someone from Brazil that has close ties to the Milken Institute to give us his thought. With that, I would like to pass it on to Laura to give us a brief background of the Milken Institute.
Thank you, Niraj. Thank you for inviting us. Gostaria de começar agradecendo ao Banco Itaú por nos convidar a ser parte desse Market Update. As Niraj said, my name is Laura Deal-Lacey. I'm Executive Vice President of International for the Milken Institute. The Milken Institute is a not-for-profit, nonpartisan global think tank that focuses on three key areas: finance, health, and philanthropy. Through our platforms and programs and research around the world, we're committed to improving access to capital, access to financial innovations, access to health innovations, and optimizing the deployment of philanthropic dollars. Our main offices are in Santa Monica and Washington, D.C. We also have offices in New York, Miami, Singapore, London, Abu Dhabi, and now Mexico City. We're really pleased that Banco Itaú invited us to be part of this conversation because for us, Brazil is a very important market. We believe that global investors should be considering Brazil as part of their global strategies. And we aim to be a bridge between Brazil and global investors. So we are here to talk about the Milken Institute's Global Conference. We've been hosting this event for 27 years in Beverly Hills. The theme for this year was shaping a shared future. We had 5,000 participants, 1,000 speakers, 165 public sessions, 100 private sessions. It was a really exciting event, and we tried to talk about all the issues that are shaping the world. But this is not our only event that we host around. We host our second largest event is in Singapore, which is going to take place in September. We're going to be hosting our first event in Latin America in October. We would like to see more Brazilian participants at all of our events. So you're invited, and you can also see all of our videos of our public sessions on our website, milkeninstitute.org. Now, Marcelo, I'll pass it on to you.
Thank you very much, Laura. Thank you, Raj, for being here. And of course, Rich, thank you so much for joining us right after the conference. I think this is going to be a very interesting conversation. And for those that couldn't make to the 1,000 sessions that Laura just referred to, this is going to be a smaller pill. I think that's going to be, again, very interesting. And I would like with exactly what you mentioned, Laura, if you don't mind, Rich, what does the conference title for this year mean to you and for you, but the whole Milken Institute, and what do you think the audience took from that? When I'm talking about shaping a shared future, and this has been kind of I love the teams that, just a side note, I love the teams that you guys put out there. I follow you probably for 10 years, not the full 27. I need to do some catch up for sure. But since 2015 or 2016, the reimagining the future or the future of mankind, it's always big themes, very bold and very very, very future oriented, and this year couldn't be different. But I'm very curious to understand what is your take in terms of this year title or theme, and what do you think it meant for the audience?
Okay. Well, thank you so much for having us. Just listening to Laura go over the conference, I was getting tired all over again. It was obviously a marathon to go through it. I'll give you some highlights. I think that we are very future focused, and when we think about shaping a shared future, given the attendees that come, which tend to be their CEOs of major corporations, their chief investment officers of sovereign wealth funds, large scale pensions, et cetera. So we have some 5,000 people from 70 countries. And I like to think of them as like active architects in building the future that they want. This is not a group of people to whom the future just happens. They actually can play a role by activating capital and policy to get things done. So I think one of the things to reflect what Laura said about the three pillars at the Institute, philanthropy, finance, and health. One of the goals of the conference is, depending which silo you're coming from, is to see how interconnected it all is. And I think coming a couple of years past COVID, I think it's a great example, because who does society task responsibility with what? How are we going to fix these problems? So in the earliest days of COVID, as it was starting to spread around the world, the philanthropic community was very activated to get PPE and all the necessary equipment to the front lines, because we had no idea how we were going to cure this virus. And then over time, what you saw is the earliest iterations of the virus, a vaccine rather, needed to be kept at sub-zero temperatures. And the thought was, well, how are we going to distribute this into the warmer parts of the world? The philanthropic community, which was very agile in the beginning, doesn't have refrigerated rail cars or trucks to get those vaccines around, nor did the world have billions of glass vials or needles just laying in wait for a new virus. So you had to activate the corporations around the world and into their supply chains and figure out how we were going to start manufacturing these earliest iterations of the vaccine. And then as they got progressively better and didn't need as much refrigeration, but the virus still kept going on. So what else was happening at that time? Economies around the world shut down. So you had to have some sort of fiscal response coming largely from governments, acting in all sorts of different ways. Some governments were going direct to the citizens, some were going and funding businesses, but there had to be some stabilization of the economies as they started to erode. And then unfortunately, even though the vaccines were getting better and better, the virus still kept spreading, and you absolutely needed governmental intervention. So you had to go the policy route, so that in parts of the world that didn't have the money to pay for the vaccine, we were still able to stop it in its tracks. And I think if you were to look back over prior crises, you would see a very similar unfolding occurred during HIV/AIDS, right? Philanthropy is usually first because that capital is most agile. Then corporations come in and there's some ability to commercialize whatever the cure is going to be. And then the biggest of problems definitely need governments. And I think one of the themes of the conference this year was, as those governments start to get along less well, and you start to see more fractiousness unfolding, like how do you navigate that, and how does the market and people who are controlling capital figure out this new geopolitical paradigm? So it was definitely touching on all of those things. But what we wanted people to take away, and I would tell you that in general, there was a sense of optimism at this conference. So I think the notion of all the advances in technology, if I just think about the health space, what we're seeing unfold in healthcare that our grandparents couldn't have imagined, and our grandchildren will have a whole other world, because people are living longer, healthier lives because of all these advances. Now, when I talk about how things are tied together that might not seem to be on the surface, in the US, which is the largest manufacturer on the drug research front, it still takes about 16 years and $2 billion for every new drug or therapy that comes across the finish line. So by design, that means that only those diseases with potential patient populations to justify that spend are the ones that get focus. So you see more iterations of diabetes drugs and heart medicine, often the diseases that humans give themselves, either through diet or other things, we tend to focus because those are expanding populations, whereas other diseases don't get as much attention. But the impact of financial markets is that existing retirement structures around the world were not designed for people to have lifespans into the 90 or 100 year. we had in attendance the governor of Tokyo, which is the largest city in the world. Some 37 million people live in one metropolis. They have so many centenarians reaching their 100th birthday that they actually hold it in a stadium now. Whereas about 50 years ago, they were able to write handwritten letters because there were so few people. So what does that mean for financial systems that are designed to sustain people through retirement? Well, if those were designed, like the United States designed its Social Security system in 1933, when the life expectancy was closer to 64, so 65 became the retirement age, and the math of that tended to work. Well, now you see the United States Social Security, as well as many others around the world, are upside down because of two factors. One, some of the initial actuarial returns that were expected never materialized. And two, you have a lot more people living way longer than you thought they were going to. So how do we think about solving that and tapping into this group of people that comes to the conference and the notion of developing newer markets that can digest more capital in places like Latin America, Africa, Southeast Asia, et cetera, that maybe historically have been excluded from full market participation, I think will help generate the returns that are necessary for that. Let me stop there and see if there's where we can.
It's a great intro, but to be honest, I love the metaphor on the architects, on everybody that's joining the conference. And I guess my second question is very, very well linked to that. If you put big teams and you link to that to like top voices in the world, I'm not even saying that they're the most intelligent, but definitely people that are friendly or very important in their field or very influential, such as the people that are speaking this year in a conference: Bill Clinton, Elon Musk, Arvind Krishna, and Kevin McCarthy. So many top names, alongside with the big macro teams and the ones following the three pillars that you just mentioned. You got to be something impressive. So my next question would be, what were the main topics discussed within the lines? You're touching on a couple already, but can we dig deeper a little bit, or at least the topics that caught your attention, caught your mind, the way that you guys designed the conference for this year?
Sure. So we designed the conference in tracks of content, so regions of the world, health, et cetera. So people can essentially craft their own journey, particularly because at any one time you might have 10 or 11 sessions going on concurrently, so you can't possibly digest them all. But there are two groups that I pay particular attention to that come to this conference. One are the CEOs that are largely running global corporations. And on two successive days, Mondays and Tuesdays, I spend 2 hours with them in a private closed-door session. So it's great to hear what's on their mind, where do they see the risks unfolding, and where are opportunities coming up. And then the second group is what we call the Global Capital Markets Group, which are the institutional asset owners. So the sovereign wealth funds, the pensions, that group collectively has $33 trillion under management. So where and how they're investing gives me some trend line to follow. And then if I overlay it with what I'm hearing from the CEOs that run companies in which they're investing, we can kind of come up with what's on people's minds. So I think I would say a couple of themes. One, human capital, first and foremost. People are concerned about it in all sorts of ways. One, the obvious, what is AI going to do? Is AI going to take away people's jobs? What are we going to do with all these people if they have nowhere to work? But I think that, and we can talk about AI a little bit later, but I would say that that was less of a perceived risk, really. And part of the workforce issues that people had post-COVID in particular was, are we getting people back to work? What does the notion of work look like to a younger generation? And does that generation, unlike prior, do they want to align the social value system that they have with the corporations at which they work and where they shop, et cetera? And it's very easy to discern that because of social media and their devices. So the technology impact on that becomes one that people are worried about. The second thing that people are worried about is global inequality. And I think that while we all know that on the surface, it's less apparent sometimes in wealthy nations like the United States. So in the United States today, 40% of its citizens can't meet a $400 unexpected expense. So while it's the largest market in the world, it's the deepest financial market, not everyone is participating. So as you're seeing, of the 20 top equity markets in the world, 14 are in record territory right now. But in most of the world, the United States included, less than 50% of its citizens own a stock. So it doesn't really matter to them. And what does matter to them is the amplification through social media of everything they don't have actually foments political unrest. And I think that manifests itself in all sorts of ways, but these are kinds of the issues that don't seem tied together. Like you wouldn't think that, well, someone's not participating in the ascendancy of the stock market, but really it does, and it manifests itself in mental health issues as well. So in the US, one of the topics that we spoke about a lot was the notion that depression is the top reason for disability for US workers to miss work. So these are kinds of like the underlying things that in the weeds, the people who are the CEOs of these companies experience on a day-to-day basis, but coming up with solutions is a little trickier. So our solution is if you can expand the pot, and we spend a lot of time actually developing financial markets in parts of the world where they're either non-existent or in very nascent stages, so that we can digest some of this capital and maybe get outsized return. So when I overlay, well, where are the investment opportunities that the group that is on the institutional asset owner side investing in? They are very much trying to align all of this together in an investment thesis. So are markets overvalued? Do people think that like the United States seems a little bit rich, the S&P where it is right now? The part of that that I think also escapes most people is that people or that group in particular is willing to pay a bit of premium for the depth of the capital markets in the United States and other developed economies. So the fact that the liquidity that a market like the United States has really does afford an ability to digest more and more capital. So some of the supply-demand issues that you see is there's a lot more demand for those types of companies, and you actually can get a global play by doing so. So if I don't think of Apple as a US company necessarily, it generates more than 50% of its revenue outside the US. I don't think of AstraZeneca as a UK company because 80% of its sales come from outside the US, right? And I think where a company is domiciled today, as many people might know, the tiny state of Delaware in the United States has the most companies incorporated in it because of the laws that favor that. But it doesn't mean that Delaware is the capital of commerce in the United States. It's just the domiciling of where people are headquartered. And the same thing. So I think people can actually get much more of a global play by investing in the US and have the security of a strong regulatory framework and deep liquidity, which helps keep those capitals in flow.
Yeah, that's a lot to digest. Thank you, Rich. The one thing, I'm sitting on Itaú side, right? So I'm thinking, I always try to connect these two markets and what does that have to do a little bit more in a short sight way, I want to say, a little bit more immediate impacts. And given the fact that you had so many, again, top voices and even regulators or politicians even, or former, in the outline for the conference for years now, I want to relate a little bit on what were the ideas and thoughts that were discussed around politics, policy, and regulation that you thought that you think it's important or at least interesting for us to discuss?
So, well, I used to run a private bank, so I know I'm trying to think of from the client's perspective also, like what is important from this conference. So one thing I'll temper, there was a lot of optimism at the conference, but this is also, if I were to go back over the last 2 years, most of the people that were pontificating about markets were expecting a recession. So a recession that never materialized. So now that there's all this optimism, maybe we need to take that with a grain of salt as well. But I think that there's still some reason, if you just look at history, right? So since World War II ended in 1945, 86% of all months that have occurred have yielded positive returns for US equities. So if you were just looking at sheer history, you would say that it's still a pretty good bet, right? And I think that, like the old saying, it's not timing the market, it's the time in the market, right? So the ability to kind of go in and out when you have an 86% chance of having a positive month is pretty strong. And I think if you looked at just across the world, coming out of the post-COVID era, so let's say there was The initial parts of that were very stimulus driven globally. So cash was flowing all over the place. People were home and spending it. Then you had the decline that came after COVID, and now you're seeing a climb out. And I think the climb out is pretty strong. So I think, developed markets are turning in 5-6% growth. The US maybe a little bit north of that. Emerging markets are closer to 10 to 15%, depending on where you are. So as long as you can find the right opportunity, well-functioning markets, the role isn't to avoid risk, it's to evaluate it and make sure that you're getting a return that's commensurate with the risk you're taking. So if you think about the instruments that are available, I think that another theme of the conference was as markets become more private, right? So when I started on Wall Street, there were well over 5,000 stocks in an index called the Wilshire 5000. Now there's fewer than 3,000. Right, so as there's less optionality as to what you're going to invest in public markets and private markets start to ascend, you see two different trends. So one, I would say that from a private equity perspective, that's changed the dynamic. So if I would go back 25 years ago, the average time from inception of a successful company to when they went public was about 4 or 5 years. Right now, that's closer to 11 or 12 years. And part of that is because the private equity space allows me to sell my company without going public, right? There's another kind of market that's emerged. And that market is deepening, but it also tends to have some time sensitivity because of the call periods. So as the call periods come towards their expiry, you do see a flutter of activity of people trying to fill the fund, because if I'm managing the fund, right, I want to make sure that it's full and I can generate income going forward. So I think that you'll see a couple of interesting dynamics there. One, there's been a ton of money raised in the private equity space globally, and the deal flow is starting to catch up. So you don't want deal flow to go just between those private equity companies, because the notion of it from the beginning was people were going to impart efficiencies and managerial expertise to underperforming companies, and you don't want it to be just financial engineering. So I think that there's a little bit of catch up to play there. But the other interesting thing about private markets is the private debt market. And that is in its more nascent stages, but growing pretty quickly. And I think if I look at, and I'll talk about the US because I know that best, if I think about how banks are regulated and the capital requirements necessary to support indebtedness and loans, and just the sheer volume of commercial real estate loans that are on bank balance sheet, right? So that's actually an asset class that's absolutely underperforming. I mean, office in some cities in the United States, no one's in them anymore. So I think you have a troubled asset class, or certainly an emerging troubled class. It occupies an awful lot of your lending ability. And as they start to erode, the financials starts to erode, you're going to have to deploy more capital to sustain that same loan without making one new loan. So it creates a very wide lane for private debt to kind of step in. Now, the difference is in the model, right? So banks tend to be consolidators of risk, right? We're gonna put it out here. I might do a club deal and source out pieces of it, but the risk is fairly concentrated and known. The distributed model of private debt means it's going to be a little more tenuous if we start to have a hiccup in the market, right? So what private debt doesn't have yet, mostly because of the immaturity of its market, is there's no workout teams. There's no, a bank has an ability that when times go astray, for whatever reason, commercial real estate, a currency devaluation, whatever it might be, there's experts inside whose really goal is to shore up the borrower and get this loan performing again. If I've distributed it in such a wide model like private debt does, and I'm not sure what the crisis that's coming, but I know a crisis is coming, right? Just because history tells you something's going to go wrong. So I think we'll see it's untested right now, but from an investor perspective, I think that you have good opportunities on both of those to supplement your public market exposure. And then the last thing I would say is that on fixed income, right? So debt markets and the ascendancy of interest rates and where inflation is and how it's sticky it's been, I think, so, in the US has north of $30 trillion of debt. So in an escalated interest rate environment, that means that the United States is spending more on interest payments than it does on either Medicaid or defense. So that is not sustainable long-term without dramatically increasing the amount of debt you have. So, and the speed with which these rates have occurred. So on the one hand, we've had 500 basis points increase, and markets seem to be okay in digesting that. But if you are the US Treasury, in 2020, the interest expense was about 345 billion. This year, it's going to be about 870 billion, right? So that erodes so much of your budget that it's not that sustainable. And then if I overlay the US election on that, it's very unlikely that if either candidate wins, there's going to be a big rollback in that because they're both promising in different ways to accelerate that. So I think if you have the US being, if we're going back to the demand supply, just on the fixed income basis, if I'm such a heavy user and the demand is so extreme, that creates a kind of interest rates can only fall so low because that's going to have an upward pressure on interest rates. So even though the Fed and other central banks around the world, that 2% target has been quite elusive, that's not the only thing in play because the United States is absorbing so much of this debt and they're borrowing more to pay the interest that they owe with rates so high. So all pressure to kind of reduce the rate. But the fact is that inflation, which has been so sticky, disproportionately affects poor people. And it is not the Fed's role to sustain or prop up financial markets. It's to deal with the people, like I said before, the 40% that can't afford a $400 expense absolutely suffer more when inflation is high. So they are trying to balance all of these balls in the air at the same time. And we're hoping to give them at least a couple of roadmap ideas to do so.
Yeah, and it's very hard for either myself or Raj to ask a question, any market update about any topic that doesn't fall back to fiscal situation in the US, at least from some different angles. So yeah, and on the private markets, we've been seeing the same thing. Not only the private market has been increasing both equities and credit, but also products and sophistication and all of that. Being distributors in the private bank, we see a lot now. Semi-liquid structures that you can avoid a little bit of the calling period that you mentioned. So sophistication is coming, size of the market for sure, and even different products and different managers. But there's a lot going on in that space as well. But I'm glad you brought it up. Now, you mentioned that we're going to talk a little bit about AI later in the meeting. I think this is probably the time. It's very hard to dodge, even though it was I thought it was interesting that the CEOs of the companies that you met early in the conference didn't. Well, it's definitely important, but that there are other important things. But it's something that we've been discussing on a daily basis, right? So I'm just curious to. And you guys said with Elon Musk, or even Brad Lightcap from OpenAI and other leaders in the field. I'm just curious to hear about what were your takeaways in terms of AI from the conference this year.
So I'd say it's a little bit of positive, a little bit of negative. I think that the people who are the real practitioners in the space, right, think that the freneticism about what's happening in markets is a little bit ahead of itself. And in other words, like there's like generative AI is the OpenAI, right, can't do math. So that's the first thing people say. Well, it can't do math. So it was like, will it get there? I'm assuming. But I think right now, the people who are in the weeds day to day think it's gotten a little bit ahead of itself. Now, from the investor perspective, it feels like a very crowded trade because you're not really sure where it's going to land or who the winners are going to be. And the long-term profit-generating strategy isn't crystal clear to people. Like the monetization strategy isn't as clear. And I think that you start to think about, well, if I just look at NVIDIA, Microsoft, Amazon, Alphabet, and Meta, those 5 companies are responsible for 53% of the S&P's rise over the last 6 months. So whenever you have a concentrated trade like that, I think it tends to swoop up people into frenzy. Where people aren't paying enough attention, that there is some positive road. I mean, generally, it's all positive around AI. But in the medical field, like the notion that AI could be used, if you go back to, as I started in the beginning, the 16 years that it takes for every drug to get approved, a lot of that is because of the clinical trials and how they're conducted. If you can think about AI conducting synthetic clinical trials to expedite that, it also doesn't care what disease you have or the marketability of it. So the fact that I don't need to have millions of potential patients to justify that spend anymore, because AI, using all of the data, is now able to really jumpstart that process. And it's already being used extensively in things like melanoma. So because I could show AI 500,000 pictures of what a melanoma looks like, you can just be diagnosed with your device because it will tell you, well, yes, that is one, or no, it's just a mole, right? And I think you're starting to see things like that about cancer detection and others. So the use inside the medical space is underappreciated, but I think is actually going to have very strong and long positive consequences going forward.
Yeah, that's a great segue because I was going to ask about medical research, right? Healthcare, which is one of your 3 pillars actually, and it's such an important space. It's part of our even from a sector view. And Raj leads the equity effort in terms of research, and healthcare is it's developing so much. And yeah, the link to AI is definitely something that we can explore. But I'm just curious to hear what about other topics in terms of healthcare, even demographics a little bit that I know that you guys discussed quite a lot with other key keynote speakers.
So I think another area of great opportunity is around gene therapy. So the ability that we have through CRISPR, et cetera, the fact that we had the mRNA technology already developed by the time COVID came meant that we were able, once we were able to map the virus, then it was just a matter of figuring out the logistics of making the vaccines better and better. But we weren't starting from square one because we actually had the technology through mRNA to deliver it to you. Same thing with gene therapy. Now that we can kind of detect where the genetic abnormalities are. So for example, and it's probably got less play than it should have, but the first child that was born deaf heard earlier this year. So through gene therapy, an 11-year-old who'd never heard before, they were able to kind of correct the deficient gene, and he hears just like you and I do. So I think you're starting to see a lot of those stories unfold. The challenge is, until we really broaden the net of clinical trials around the world and see what the different genetic compositions and how they respond to different diets, different climates, et cetera, it's going to be a little bit of a longer process. But the fact that AI, again, is able to synthesize so much of that data is going to be extraordinarily helpful. So I think we're very bullish on that, on diagnostics and therapies that can be used now. If you just think about our grandparents couldn't have gone through an MRI. When the first human genome was mapped through the project, it cost over $1 billion and took like 20 years. And now you can have your gene sequence for $100 and get an hour result. So I think that same kind of speed is occurring. The challenge, again, goes back to the financial overlay. Like until we get the systems that are sustaining all of these people into life, the average person, let's say the average person that dies today is 80 years old. They were born before everybody had a television in their house. Our kids and our grandkids will have a digital and technological life we can't even envision. When we were kids, like talking to someone and seeing them like we're doing today was science fiction. It was in a movie. And now we just take it for granted that it happens every day. So I think we have to kind of change the psychology of how people think about aging, right? So I think that is one of the primary themes that is at this conference, is that the whole notion of what does aging look like and where is demography? So the other thing when I think about navigating financial markets and the geopolitical overlay is, where are all the people and how old are they? So if I were to think of Japan, where I said we had the governor of Tokyo there, the median age in Japan is like 46 or 47. In Brazil, it's probably 32. In the US, it's 40 something. But in Uganda, it's 15. And in Nairobi, it's 17. In Nigeria, rather. So if you start to think about where the younger people are and where they are unfolding in mass, it tends to be in parts of the world that are economically disadvantaged with very immature capital markets and some disruption. It's a geopolitical disruption generally. And it's also, if you go back in time, where the populations are unfolding at the fastest pace are the parts of the world that didn't participate in developing how the rules of the world work, because they never really had political voice. So now if you see this shift, the median age in a place like Italy is like almost 50, right? So you start to see the shift of where are aging populations that are going to need to be sustained, and where are the younger populations, and what are their lives going to look like if they're not involved in technology, if they don't have devices, if they work in parts of the world that don't have developed capital markets. So one of the programs that we have at the Institute is really to develop capital markets in those countries that may not have a fixed income or equity market so that they can digest some capital. And two beneficial things from that. One, the capital is going to come largely from the more mature parts of the world that need outsized return. And two, it's going to lift those people in country out of poverty because now they have some financial life they didn't have before. So it's a very interesting way to look at the world, like the age of people, whether there are established financial markets in those countries, how those countries get along with their neighbors, and who developed the rules in the first place. And I think if you start to look at that as an investor, you can see where you have a ramp for outsized potential returns, as opposed, if you can get it right. The other part I would say is we had very significant representation from the Middle East at the conference. So Saudi Arabia, UAE, these are countries that obviously became very wealthy on petro and oil, but the UAE didn't export its first piece of oil, until 1962. So it's fairly new. And I think when you have these huge pools of capital being developed in parts of the world that can't digest the capital locally, they need to deploy it elsewhere. And that goes back to Laura's comment in the beginning. There's no reason that Brazil shouldn't be the recipient of a lot of this capital.
And just as a follow-up question, I received online from one of our clients. How do you feed dropping fertility rates and the whole change in demographics into this discussion? I mean, it affects healthcare, of course, but it's a whole new topic by itself.
Well, a lot of countries in the world, Japan, South Korea, are way below replacement rate, right? So I think that and to varying success, many of these countries are trying to get people to have more children. Right, and I think this is one of Elon Musk's big points, is that part of it, one, intergalactic travel and going to other planets, but two, and maybe the easier one, I don't know, maybe the first one is easier, is to increase the rate. But in the parts of the world like sub-Saharan Africa, et cetera, is way above the replacement rate. It could be 4 to 5, not like 1.4 or 0.8. Korea is like at 0.8. So I think it's a challenge. I don't know that the incentives are working because you have women who've entered the workplace that wouldn't have a generation or two ago. Still a lot of runway in parts of the world, Brazil included. I think in Brazil, probably 52 or 53, the last I saw, % of women work. Mexico is even lower, less than 50% of women are in the workplace. Some of it's cultural, some of it's opportunity. So as women enter the workplace and have careers and have more financial independence, there's just a natural decline in birth rate. In the parts of the world where women have fewer opportunities, there's more birth rate, right? So I think, again, it's at some point, you don't want to risk the extra geopolitical tensions by those ascending populations having no financial opportunity, and all the financial opportunity captive with people who are aging and aging and aging, right? So that's why we're trying to create more runway to digest that capital and then create opportunities all around. But it's an issue, I think, and even in Japan, again, this is, we're familiar with it, they have all these programs where they'll have childcare, they'll kind of incenting people to have more children, and it doesn't seem to be working because at the same time they're trying to reach out to women to have them join the workforce because of that phenomenon of you need to keep people working longer.
Yeah. not easy, quite complex. Thank you. So last question before closing remarks, it's around sustainability and environmental discussions that you guys had. Right? I mean, from a global scale, we just had devastating floods in Brazil. At least that connects quite a lot. It brings very close to home, even though it wasn't the only reason, but of course, touch on the whole environmental and sustainability topic. So I just want to hear some of the remarks, some of your takeaways from the conference on that matter.
I'd say that there's definitely a several trillion-dollar gap between the money that's being devoted towards solving some of these issues and the need. And part of that is the political overlay, particularly in places like the US, where everything gets politicized. So there's a notion that somehow being green or leaning into sustainability erodes your return and makes you weak in some way. And I think that when I was in Brazil earlier this year, I heard sustainability every day, and people creating a lot more financial promise using sustainability as a guide. So I think the politicization of it in the United States is curious to me, because you have a state like Texas, which has now forbidden using ESG, right, environmental, social, and governance, as a caveat to invest the state's dollars. At the same time, similar to Brazil, they had a storm over the weekend that's estimated to have wrought $5 billion of damage. So you can't like deny that these changes are occurring and then having the economic hardship to cure them and then restrict people from investing along those lines. So I think that those are going to be the winners. Can you solve for this environmental problem at the same time you're generating financial return? And that should be an easy match. There should be so much demand and ability, and going back to all the technological advances, not just AI, but the ability that we have to generate electricity, to generate hydropower, wind power, et cetera, would seem to be a win-win. And yet, in some odd way, it's been politicized. So I think that it's going to have to, again, I would say that climate change disproportionately impacts poor people. And because they tend not to have as much political voice, you see that kind of struggling a bit. But there's definitely a lot of interest from the money. And when I started saying before is the money, when you have an enormous amount of money generated in a part of the world that can't digest all of that capital locally. So back to the Middle East, a place like Singapore, right? Singapore has the highest concentration of millionaires per capita in the world, with no real natural resources. But what they leaned into is a rule of law that lets people feel comfortable deploying capital on that island. The same reason that people flock to the United States, but that's not a closed club. Any country can create a set of rules that then makes investors and investor dollars feel comfortable deploying there. So I think if you were a person, Saudi Arabia's #2 export is money. #1 is oil. The second thing they export most is money, cash. So because that's the two things they have the most of, right? Oil and cash. So, but they don't have enough market in Saudi Arabia to invest all that cash. So it has to go somewhere else. They know that long term, I think that whole region, while today 80% of anything energized is coming from fossil fuels, like down the road, it's going to be lower. So if you were making all of your wealth from something that you knew was going to have a declining demand curve, you would say, let me try and figure out what else I can do. And I think climate is a likely infill for that.
Thank you so much for all of that, Rich. And I'm gonna finalize. We still have a couple of questions. I want to see what I hear Raj and definitely Vinicius with the let's call local view from a Brazilian that also has been part and a partner, a fellow of the Milken Institute. But I just want to final remarks from you, your takeaways from the conference or anything that you would like to share that caught your attention the most. I know everything was interesting, but I was just looking for a couple of specific points.
I think, I mean, let's just use the Brazil lens, right? I think, as I just said before, there's no reason that Brazil should not get, it's the 9th largest economy in the world, get its share of this international capital that's floating around looking for a home. So I think that that's a great opportunity for all of you going forward. is to figure that out. I think the speed with which change happens often escapes people. So one of the statistic I heard when I was in Brazil is that 40 years ago, Brazil was a net food importer, and today it's the breadbasket for the world. That's within our lifetimes. That's not that long a time. So the notion that people tend to get wed to the way things always are, that's one of the things we're trying to break at this conference. Is I want people to see the world differently and say, just because it's been that way, it doesn't mean that the speed of innovation can't change and create a whole new future. So that makes me very optimistic, and I think that fed the optimism at the conference. I think that there's always ups and downs in markets. That's the way they work, right? But I think you want to be able to think, are we on like a generally long-term trajectory, not only for financial return, but for human return? Are people going to feel better about their lives around the world at the end of, while we're here, or not? And if you think about money, like I always think of money as something that if it's captive and not doing anything, like so what? Like most people have like a lot of money that they're never going to spend. And then when you think about returns, like there's still some $10 trillion that's earning 0 or a couple of %, right? If we just need to be the catalyst to unleash that capital towards some societally productive means, whether it's in healthcare or in environment, then I think that just creates a better future for us all. And that's what we're trying to do.
Perfect. Thank you so much, Rich. I appreciate all the comments and remarks, and again, thank you for joining us today.
Sure, my pleasure.
Feel free to stay. We're going to take for another 10 or 15 minutes, but I just want to appreciate.
All right, thank you.
Now, taking back into you, Raj, and I know you're an avid consumer of Milken Institute, and especially the conference for the past few years, and I know that you're very into the conference, or at least for the ones that you could attend online this year, I guess. But just bringing back to US and your views, linking into the equity markets for developed markets that you're area for expertise, and even to our clients and the way that we see the world. I would love to hear your views generally for the topics we discussed.
No, I mean, I think there's a lot of things that came up, and I think Laura in the beginning mentioned a lot of content is on the website, so I think it's great place to go and listen to a lot of the panels again, or for the first time for our audience. I think from my point of view, I follow equity markets in the U.S. mostly. What did the Fed officials have to say at the conference? I think it was interesting. Fed Governor Williams was there, Fed Governor Kaskari, and generally they seem to signal that rates will be at this level for some period of time. Kaskari said, look, it seems like we're at a place where we're going to keep rates here for an extended period of time, which is something that we talk about at our investment committee. And when is the Fed going to cut? When is inflation coming down? There was debate on what is the neutral rate. So Kaskari commented maybe the neutral rate for the U.S. is higher. Fed Governor Williams talked about there's upward pressure long term for the neutral rate or interest rates generally because of the fiscal situation, which Rich mentioned, but also demographics, which also Rich mentioned, is putting potentially downward pressure on interest rates. So kind of commented about those different topics. I always like to hear what other CEOs, and again, I'm sure Rich gets a lot more content with some of these private meetings that he has in smaller groups, but when you listen to Jane Fraser at Citigroup, the CEO of Citigroup, and she mentioned that, again, for equity markets in the US, she said it could be a win-win situation, barring no unforeseen shock, that if growth continues to be good, that's good for equity markets. And if the Fed cuts interest rates, that would be good for equity markets. So I thought those were some interesting comments. And then maybe lastly, my background, I used to be, worked at a few different hedge funds, hearing what other hedge fund managers had to say. Ken Griffin, who's now a Miami resident with us, commented about a lot of different topics, and it's always interesting to hear what he has to say. But that the Fed looks like they will be looking to cut at some point at the end of the year. But the question then is, with the elections, does that make it tricky because you don't want to, show that there's political interference? So a lot of different topics. Even AI, the COO of OpenAI was there, And it was interesting that he commented how the pace of change that we've seen is going to continue, and in his view could actually accelerate, which obviously when you hear something like that is obviously exciting to hear that there's a lot that is still going to come out with regards to AI. There's a lot of uncertainties too, because if you probably look at the path of potential outcomes, it's so wide. But I think shortly after the Milken Institute Conference and presentation, they came out with their new version of ChatGPT 4.0, which stands for Omni. And so you can see some of these products immediately after a conference. You kind of said the pace of change is going to accelerate, and then they came out with a new product. So I think there's a lot of interesting, topics from the conference that then translates into the investing world.
And just as a follow-up, and you mentioned kind of Jane's view from a Citigroup and the win-win. We recently upgrade U.S. equities in our committee, right? In our U.S. location and portfolio construction. Can you briefly comment? I know it's not really the topic here, but I think
I think just to be quick, we went overweight U.S. equities on the correction, if you want to call it that, a small dip in the market that we had in April. So what we did was we went overweight U.S. equities and we went underweight European equities. And so the idea here was, one, it adds a little bit of risk in total because U.S. equities is a higher weighting. And the second is, we see a much better growth outlook in the U.S. Equity market, both for this year and next year. Some of it ties in. I think Rich mentioned the composition, right? You have companies in the U.S. that are global, so you do get to participate in the global growth aspect, but they have very strong positions, good margins, good returns. When you combine it all together, it's the region that we think is the most interesting when you look outside of Brazil and the markets that I look at. And so that we took that opportunity to go overweight.
Marginally increasing equity risk, but it was a kind of a relative play.
Yeah, so adding a little bit of risk, but wanted to add it in the region that we like the most, which is the U.S.
Perfect. Thank you, Raj. Yeah. I'm going to switch back to English for our last...
Portuguese.
Again, almost American now. Switch back into Portuguese for the last piece, if you don't mind, Raj. I know you're picking up quite a lot, but... Vinícius, quero te agradecer de novo por estar aqui. O Vinícius além de ser o chairman do Wish Group, ele é um fellow com o Milken Institute por algum tempo já. Então ele tem uma entrada muito forte no próprio na conferência anual e no grupo como um todo. E é brasileiro. A gente tem o benefício dele ser brasileiro, então ele consegue dar uma visão muito legal de um brasileiro estando nessa conferência, muito perto desse grupo, que ajuda a gente, acho que ajuda tanto nossos clientes quanto o próprio banco para entender um pouco melhor dessa visão, apesar que o Rich deu uma lente no final de como o Brasil é percebido, mas eu acho que tem um carinho de casa que nos ajuda. Então, Vinícius, obrigado por nos juntar. Eu adoraria entender um pouquinho da tua visão e o que você tira, não só do Instituto, mas dessa conferência.
Bom, obrigado a todos vocês e ao Rich, a Laura, e a todos que estão nos ouvindo, parabenizar o Itaú, o Private do Itaú, por estar fazendo essa conexão, esta ligação, que eu entendo muito importante. Eu conheço o Instituto Milken há muitos anos, tivemos muitas interações desde 2007, 2008, 2009, e eu vi o crescimento desse movimento, o movimento do Instituto Milken como um todo, e da Conferência Global, do seu crescimento. Em especial, este ano foi uma conferência de um tamanho maior do que os anos anteriores, o que demonstra a necessidade dessas pessoas estarem juntas. Depois da fala do Ditizio, da Laura, eu acho que fica mais fácil tentar explicar por que eu acho importante. Eu acho importante porque o Brasil tem uma percepção equivocada da sua presença em fóruns como esse. Ele deveria ter muito melhor consciência da sua ausência, né? É muito pequena a presença, historicamente, em fóruns dessa natureza, ou nesse especificamente, que eu reputo um dos mais importantes do mundo, porque é um think tank legítimo, mas é um think tank composto de pessoas com grande capacidade de mexer naquilo que o Richard Ditizio, eu acho, colocou muito bem, que é a questão da digestion, né? of capital markets, ou seja, da capacidade e das possibilidades que nós temos como país de ser receptores de muito mais investimentos diretos, mas também pela aproximação, pela visão, né, pela construção de visão que se busca no Instituto Milken, tanto do ponto de vista do seu papel mais social quanto do seu papel mais financeiro, é a ideia também de soluções, de market solutions to social problems, ou seja, usar esses mecanismos, né, de mercado e muita inteligência e busca visão, né, visão para aproximar soluções de toda a natureza. O Brasil está, na minha opinião, longe disso. E eu acho que o Milken Institute é uma forma no atacado de gerar proximidade, gerar intimidade, gerar confiança, gerar presença e continuidade, no sentido de, pensando em digestão, né, de capital markets, né? O Brasil tem, e eu, aqui resumidamente, eu fui speaker no último evento, eu falei muito da diferença de percepção que o mundo tem sobre a nossa capacidade de consumo hoje, né, e do que as pessoas imaginam. Nós somos líderes em consumo entre 3, 4, 5, sexto lugar em uma miríade de produtos. Nós, brasileiros, sabemos disso, mas isso não está nos valorizando. Depois, também, nós temos muitas oportunidades em grandes complexos. O complexo industrial brasileiro precisa ser todo refeito na direção de exportação de energia limpa. O complexo do agribusiness tem muito espaço. O complexo da natureza, o complexo da saúde no Brasil, é enorme. Nós somos um dos maiores compradores de saúde do planeta, porque nós temos o National Health Service no Brasil, que é o SUS, né? O complexo turístico brasileiro e o grau de fechamento ainda da economia brasileira. Deixa eu dar um exemplo da minha área. Nós temos 6 milhões de turistas estrangeiros, mas nós temos 240 milhões de viagens no Brasil. Olha o descompasso que tem entre a percepção do nosso tamanho interno para a nossa relação com o mundo exterior. Então, o espaço de relacionamento da Global Conference, na minha opinião, é um dos espaços de shortcuts, de mais rápidos, para que a gente possa ter essa participação e, ao mesmo tempo, eu já disse isso ao Richard, tive a oportunidade de dizer no passado ao Mike Clouden, amigos meus mais antigos do Instituto, é o próprio Mike Milken, que eu acho que o Brasil é o lugar natural para essas coisas acontecerem. Eu falo muito do Cone Sul, Brasil, Argentina, Chile, Uruguai. Nós somos uma zona temperada, em grande parte, mas uma zona que vai até o Equador. Pré-condições já atingidas para uma nova etapa de desenvolvimento. Mas nós precisamos de reformas. E aí está a vantagem de trabalhar com um think tank que pensa não só no financeiro, pensa não só no operacional, no tático, ou só no estratégico, que é o que está nos faltando. Nós, no Brasil, precisamos de reformas. Eu acho que o que o Richard falou aqui é inovação, enfim, é uma outra fala. Fala é muito importante. E a fala no Brasil, hoje, mesmo nos Estados Unidos, é muito divisiva. Nós estamos com uma fala reduzida, ideológica, e nos cabe, aqueles que estão interessados em negócio, em digerir capital internacional, porque nós temos a condição de receber nesses vários complexos, nós temos essa capacidade, poucos países têm, e nós somos um país ocidental, um dos últimos que sobrou, né, para fazer uma nova fronteira. Acho que nós estamos perdendo muitas oportunidades no nearshore, muitas oportunidades em todas as áreas. Eu falei hoje, Laura, com o governador Helder, para que nós façamos a nossa conversa, a nossa conference com o Richard, né, para que interajamos mais nessas relações do jeito que está pensado, Market Solutions to Social Problems, do jeito que está pensado estrategicamente, politicamente e filosoficamente, porque daí nós conseguiríamos afetar agendas de reformas também no Brasil, porque nós podemos estar mais próximos de pessoas e de conversas e de outras falas. Isso é muito, muito mais importante do que, à primeira vista, apenas cuidar dos nossos negócios, porque isso também estará acontecendo. E eu falei aqui, a outra coisa muito importante para os negócios é a proximidade, é estar presente, estar nos corredores da Global Conference ou das outras conferências em outros lugares em que o Instituto Milken organiza essa aproximação. Então, basicamente é isso. É muito clara a minha mensagem. Acho que nós temos que ter, primeiro, a consciência da nossa ausência. Ela é gritante, né? Não só aqui, em muitos fóruns mas aumentou, mas ainda é desproporcional ao nosso potencial e à nossa importância. Eu disse isso lá para a Laura, durante o nosso encontro, que tem uma coisa que faz com que o Brasil chame menos atenção. Nós não temos tantos problemas. Se nós tivéssemos mais problemas, nós geraríamos mais atenção. Então, como nós não temos os problemas, não vamos esperar ter problemas para gerar atenção. Vamos gerar atenção mediante reformas no nosso hemisfério. Na nota final, eu quero também apontar uma coisa que eu acho que o Milken Institute pode nos ajudar a fazer, que é a aproximação empresarial e política. Eu acho que a agenda norte-americana, eu faço parte de outras agendas internacionais também, como a agenda do Belt and Road Initiative, eu acho que o discurso norte-americano, muito concentrado em imigrantes, drogas, nos problemas que são reais, existem, né, na relação nossa hemisférica, tiram a importância de termos uma agenda mais positiva. Eu acho que não vejo hoje agentes trabalhando nessa dimensão de uma agenda positiva entre o Brasil e os Estados Unidos. Não falo dos 70 países agora, só Brasil e Estados Unidos. Brasil, Estados Unidos, México e a nossa região. Eu acho que tem espaço para nós construirmos aí uma agenda mais positiva, fazendo com que haja mais encontros de falas e uma percepção mais próxima do mundo real, porque eu acho que no final, e terminando aqui, eu acho que os países criam reputações que são muito clichês, são muito resumidas da complexidade de um país do tamanho do Brasil ou da complexidade de um país como os Estados Unidos. É muito bem relatado aqui, do ponto de vista conjuntural, pelo Richard, né? Mas eu acho que nós precisamos de proximidade, das pessoas estarem próximas. Eu acho que não existe, eu não daria nem a Davos essa condição de benefício para o Brasil, que é participar do Milken Institute, e falo para vocês como empresários, investidores, e reitero isso também, parabenizando o Itaú e o Private do Itaú por estar fazendo essa ligação. Eu me coloco à disposição para estar ajudando a fazer essa ligação. E, Richard, we would like to be the digester of your foreign direct investment, and I think you're right, certo? But we have to get organized and get an agenda together. Obrigado, thank you.
Yeah.
Vinícius, obrigado. Eu sinto uma inquietação e uma oportunidade na mesa aqui. Conversando com você, só fica mais claro isso. Então, quero te agradecer. Rich, thank you so much for joining once again. Laura, it was a great, not introduction, but also connecting us. Raj, appreciate you coming again and helping us out. This is always fun. I appreciate it. Very interesting. And Vinicius, of course, for the final remarks from a Brazil perspective. Of course, all of our clients and anyone that joined the live, thank you very much. And I'll see you guys next time. Thank you.
Yeah.
Take care, everyone. Bye.
Bye.